Hello everyone, it's Steve with Aptera Owners Club. A few days ago, Aptera released another SEC filing. I think this is in preparation of them reopening up investments to non-accredited investors. Remember, they closed that down a few months ago, and I believe that they're getting geared up to open it again to non-accredited investors. If you're an accredited investor, then you can still invest now directly through them. But if you're a non-accredited investor, currently this investments to Aptera are closed to you, but it sounds like they're going to open it up pretty soon. All right, so I looked through this SEC filing, which was dated August 10th, 2023, and I did not find anything new, but I think it's a good time to kind of just go over some things again. And But yeah, if you've seen the previous SEC reports, there isn't anything new or earth-shattering in this SEC report. Okay, and then just a disclaimer, I am not a financial professional. This is not investment advice. Those of you guys who have been following this channel for a while, I've told you my dismal investment track record. And so if you do any investment based on advice from me, that's on you. I have a terrible track record. You should probably not follow any advice I give. Anyway, I'm not trying to give advice. I'm just going over this SEC filing for those of you guys that are interested. All right, so here we go. What they're planning on doing is they are planning on trying to raise up to $39 million by releasing these Class B common stock. And let's go through some. So here we go. If you look at this, there's 55 million Class A common stock. These Class A common stocks are the only voting stock. No one is selling these. The only people that have these are Michael Johnson Investment Company, Chris Anthony, Steve Fambro, and Patrick Quilter Trust. Those are the only people that have Class A common stock, and those are the only stocks that have a voting capability. You can vote out the board and stuff like that if you have Class A stock. Class B stock is a stock that the crowdfunding has gone through, and that's what's being offered. These are the same as Class A stock in everything except you cannot vote. All right, and then there's some of these preferred stocks. I think these are like WeFunder round things, and maybe some of these are probably like internal stock options, that kind of stuff. All right, so if you look at this, if you add all these up, there's about 78 million shares of stock outstanding. If you valuate them at $10 a share, you're looking at close to $800 million market capitalization. So Aptera is valuing themselves at $800 million. And you'll have to decide whether you think that's a good valuation or a fair valuation at this point. Alrighty, so then let's go to some risks. We haven't gone over these in a while, but I think it's good to know. I have had some conversations on our Discord channel recently, and I think maybe some people don't fully understand the risks of investing in Aptera, and they make it very clear to you in their offering circular what the risks are. So the risks are they have a limited operating history upon which you can evaluate our performance. They have not generated any profits, and accordingly, our prospects must be considered in light of the risks that any new company encounters. So the company was incorporated on March 2019. They have no profits. They had a little bit of revenue from Andromeda Interfaces, which they absorbed, but then they later sold back to Andromeda's owners. So Andromeda Interfaces and Aptera have parted ways. So they have not generated any profits or any revenue. And they says the likelihood of our creation of a viable business must be considered in light of the problems, expenses, difficulties, complications, and delays frequently encountered in connection with the growth of a business and operation in a competitive industry and continued development of our technology and platform. This is just a long way of saying creating a startup car company is extremely difficult. Failure rate is extremely high. We have seen this firsthand with Lightyear, Sono Motors, and as far as I know, the only three companies that have made it to market are Tesla, Rivian, and Lucid. And you know how well Lucid stock is doing lately. It's doing poorly, even though they have actually delivered vehicles. I guess Archimoto has made it, but they're essentially having a lot of financial difficulties. Electromechanica Solo delivered some cars, but they are also having serious problems, and they're probably going bankrupt and insolvent fairly soon. So anyways, this is a very, very difficult business, and that is the business that Aptera is trying to get into. And then our auditor has issued a going concern opinion. The company lacks significant working capital and has only recently commenced operations. That means they don't have that much cash on hand. They will incur significant additional costs before significant revenue is achieved. That means they're going to have to spend way more money before they get to production. And they've said, I think they've said like $50 million before they get to production. These matters, so they don't have a lot of money and they're going to need a lot more money to make it to production, is basically what they're saying. These matters raise substantial doubt about the company's ability to continue as a going concern. So going concern sounds bad, but going concern is a good thing. That's accounting speak for saying if a company is a going concern, it means the company can continue to function. So right now, Aptera is a going concern, which means they can continue to function. They have enough money right now to continue to function. But there is substantial doubt that they can continue as a going concern. And our existing cash resources are not sufficient to meet our anticipated needs over the next 12 months. So that means, however, the money that they have on hand right now is not enough for them to survive for another 12 months without raising more money than they have. So during the next 12 months, the company intends to fund its operations with funds received from a Regulation A offering. So they're saying they're using this offering to fund their operations for the next 12 months. If they don't raise money, they will not be able to continue. And additional debt and equity financing is as determined to be necessary. There are no assurances that management will be able to raise capital on terms acceptable to the company. So there's no guarantee that they're going to be able to raise this money. If we are unable to obtain sufficient amounts of additional capital, we may be required to reduce the scope of our planned developments, which would harm our business, financial condition, and operation results. Financial statements do not include any adjustments that might result from these uncertainties. Okay, so basically, they have not a lot of money. They need a lot more money to continue. They don't have enough money to continue for the next 12 months, but they plan on funding it with additional crowdfunding and investment. And there's no assurance that they can find that capital. And if they don't find that capital, they will have to reduce the scope of our planned development. That is kind of a euphemism probably for they can't go to production. They may have to sell off their IP, or try to get have some alternate plans. Remember Sono Motors, they had to scrap their car and they went into just producing panels for other companies. And that is, maybe what Aptera will have to do if they don't find enough money. Sono Motors just basically ran out of money, and so did Lightyear. Okay, so these are things that they've been saying the whole time. If you go back to the offerings from like the SEC filings from 2021, these are the same things they've been saying the whole time. Now they've found enough crowdfunding to continue to operate, and so I think that there's no problem with that. But if they don't continue to raise funding, they have no other source of revenue. They're not selling cars. There's no other source of them raising capital to continue operations. And they need a lot more money before they make it to production. Okay, so then let's go over some other stuff. This is their planned distributing and selling of their securities. So as of August 8th, 2023, the company has sold 3.4 million shares of common stock in the last 12 months. So they've raised $35 million in the previous 12 months. So from August of 2022 to August of 2023, they've raised $35 million. And then they are going to offer an additional up to 39 million, which, see, there's a 12-month rolling 12-month maximum offering of 75 million, which may explain why they had that little quick pause so that non-accredited investors couldn't get in. So then the company is offering our Class B common stock on a, quote, best efforts basis. Now I looked up best efforts and I thought that it meant that was their way of like valuating the company. That is not what it is. This best efforts means that they're going to try to do their best to sell the stock. The underwriter is going to try their best to sell the stock. That's what that means. So nothing too earth-shattering there. Okay, let's go to the next part. This is how they plan on spending the money. Okay, so if they raise $10 million, so the most they can raise in this offering is 36 million. But they're saying if we raise 10 million or 20 million or 36 million, this is how they're planning on spending it. So the offering spend, so they're gonna have to pay this much to their underwriters and to their brokers. Okay, so looks like it's about half of like 10% or 5%, between 5 and 10% is what they're gonna give to their underwriters and brokers. Then this is how much money Aptera is going to actually get after they gives it to their brokers, pay their broker fees. Then they're going to spend this much money on development and design, this much money on production and equipment, and this much on selling, general, and administrative. This is like marketing and salaries to their employees and stuff. I think probably salaries have something to do with this too. This is probably encounter. So it seems like most of the money is going to go to development and design still. So I don't know if this needs to be kind of updated, because I think a lot of the development and design is done at this point. So this may be percentages kind of from an old offering that they're quoting in here. Okay, so then they're talking about their advantages. What are their competitive advantages? Their competitive advantages are that they have lower manufacturing costs because they're doing a lot of their sourcing from their suppliers, and the suppliers are going to give them like basically finished modules, and they're just assembling them. Like the body's going to come from CPC, the motor's going to come from Alafe. It sounds like they're going to build their own battery packs and stuff. But basically, these big modules are going to come together, and so it's going to be very cost efficient and simple tooling. There's going to be rapid and inexpensive scaling because the manufacturing strategy allows them to build additional factories very quickly and easily. There's reduced parts weights and count, less labor, less space. Okay, so those are their advantages in terms of manufacturing. Of course, we all know about their advantages of their efficiency and solar and all that stuff in terms of the body, in terms of the vehicle design. All right, so this is who owns all the Class A common stock. It is Michael Johnson Properties Limited, Chris Anthony, Steve Fambro, and Patrick Quilter Trust. So if you add these all up, it adds up to 55 million shares of stock, which is what they will show. This is how many shares of Class A common stock are. And these are the only 4 entities that own that. And these are the only kinds of stock that have any kind of voting capability. All right, so see, they say right here, Class B common stock has the same rights and powers and ranks equally to shares ratably with, and is identical in all respects and as to all matters with Class A common stock, except that Class B common stock is non-voting and not entitled to any votes in any matter that is submitted to a vote of our stockholders, except where required by Delaware law. And so they did that on purpose. I think they did not want to lose control of the company as they did in the past. So therefore, between Chris Anthony and Steve Fambro, those two will hold 53% of 53.85% of all the Class A stock. And as long as those two are in agreement, they can overrule anything else. So they maintain control of the company, basically. All right, and yeah, so that's kind of the gist of it. Let's go through some finances really quickly. These finances have not changed since their December 2022 offering, because that's the latest finances that they have. So if you look at their finances, this is how much cash on hand they have. They have about $11 million of cash on hand at the end of December. We do not know how much cash on hand they have now. I am told that the accelerator program was very successful and gave them a long runway, so they may have more cash on hand now than this, but they had about 20 million in a year ago. So they're down about half the amount of money over the year 2022. All right, so then you look at this other stuff, and that's basically the most important thing. They have no revenue because they're not selling anything, and they just have a lot of liabilities in terms of their lease agreements and things like that. And then if you look at what they're spending their money on, research and development, they spent $40 million, general selling and administrative, $20 million. And so they've spent $61 million in 2022, and we do not know how much money they've spent in 2023. I suspect it's going to be even more, but we won't know until we see the SEC filing for 2023. Okay, well, I will link this report in the description below. Please check it out for yourself. Again, this is not investment advice. We're just going over this. There's not a lot of new things in this offering circular, but it does seem like they are planning on opening this up to non-accredited investors soon. And overall, things have not changed dramatically in terms of their SEC filing in the past year. So these risks that they talked about, which we went over a little bit in more detail today, are the same risks that they've been saying for the past 2 years. So those things have not changed. All right. Well, tell me what you guys think in the comments below. Thanks for watching. Have a great day, everyone.